And we are live. What's going on, guys? It's Friday, and Fridays are scary, especially when it's my 13th day trading on this evaluation. And the reason is not just because I'm a superstitious person, but because last evaluation on the 13th day is when we don't want to today, but we're not going to do that. We're not going to cook. We're going to try to cook the market, not get cooked. But the market is dropping pretty harshly, and well, it's leaving zones for us to check out. So let's do it a little bit of a top down. From yesterday, we had the 5-minute. I think there's a lower. Yeah, there should be a zone here, I think. I don't know if it's not appearing on my chart. Okay. Maybe it's not this chart. Let's see. Let's check out. Same thing. Oh well. We'll do a top-down analysis real quick on the 5-minute. The price is coming from this high here. And it put this low, which was tapped. Take a note of that. So we got 50% of that. This is S&D is the responsible one for breaking the lows. Of course, to the very left, which are pretty far away, because we are trading back at prices that were, a while back. Let's just scroll down to see what we can see. You see, all the way over here. And this is good that we saw this, so we can take note of this low here. But the low is really farther away then, because we're all the way down here. I'm gonna have to scroll all the way, see if I can find any price action. These charts don't give you the best information for a long time like other platforms. We got this high that put in this one, this low that put in this high, and this is where we are here. We also got this area here. Where we are right now, 50% of that. We got the high here is at 50% pretty much of this area is the tap on these areas here. Then we traded lower, traded up. Okay, this is good for us to know. So we got these two range areas pretty much. This is and if we consider that, then we're at the bottom of the range. So we might look for a long see if this low gets respected, and see what happens here. So we're in an interesting place where we could see some potential to the upside. Now we just did, so we got this high put in, so didn't run this high over here, this one. That's the high that needs to be ran, and this is definitely the S&D responsible for breaks to the downside on the shorter time frame. Yeah, we have a fractal here, this S&D zone here. All right, that's our plan here. Is this is the range, unless price goes down or gets out of the range on the upside. But if we're over here, we're not gonna thinking of longing, we're gonna wait. And if we're down here, we're not gonna short, we're gonna wait. But if there is an opportunity to long, we might take that. So yeah, number 13, where does that come from? You know, where does the 13 number came to be a superstitious, and is it universal? Some, like, it goes serious, like some places don't have a 13th floor because of superstition, right? I mean, that tells you something. It's not just nothing. Is it? Okay, we have a thing from University of South Carolina. Dang, can't speak. Oh, in Japan, 9 is unlucky. Who knows how much that is true, but that's what the University of South Carolina says, is that any number could be associated with that luck. But one of the main reasons, well, it may be, like the number 13 may be associated with the famous but undesirable dinner guests. In Norse mythology, the god Loki was the 13th to arrive at a feast in Valhalla, where he tricked another attendee into killing the god Baldur. In Christianity, Judas, the apostle who betrayed Jesus, was the 13th guest at the Last Supper. Oh, so it's Judas. Hey, you know, Judas is not such a bad guy. You know, you gotta give him a chance. He didn't know better. That's why, you know, Jesus was like, "Hey, Judas, I knew you would do this. I knew it. You're not ready." But can't be mad at the guy too much, you know. So the 13th guest. The 13th guest. So today's the 13th day of my evaluation. And it's Friday. And the 13 days when I blew up my last account. So we'll see how it goes today, because we still have to trade the 13th day. It'll still be no matter what, unless we stop trading forever today. We just don't take an order ever again, then we can avoid trading on the 13th day. Yeah, I'm gonna wait for these setups because I think we can go upside, but it might take orders of people who are thinking the same thing before leaving, or it could leave abruptly, not leaving the orders here and getting them back later when it comes back around, if we are in a range which is pretty much this and this this is part of the range, this is part of the range, but it's a bit of on the outside of the range. Whereas here is more like in the middle. So we consider this to be our area to trade from at the moment, which all could change without a notice. Hope you guys are doing fine. Okay, no one watching yet, but you know, people pop out every now and then on my streams. Not lately, but that's fine. I think I get more views when I lose, so I'd rather not get views than lose. So that's actually a good thing that nobody's watching. You see, that was the order. That was the order, and I said I'm gonna wait because price might take these orders first and then leave. It didn't. It started leaving, but it hasn't run this high or nothing. So we can still come down. But I don't want to short because we are at the bottom of our expected range. You see? So there's a lot of buts and ifs for every move that we try to make, for every move that we try to make. But what I'm thinking here is wait. If it goes down lower, then so be it. But if it stays around here and comes down to about here, maybe get a lift up to around here at the end of before the high here, before this high. So around here, take the profit there, because from there it might go down again, then move up again, back to this area, flip up and back again, back to this area, take the orders that I was talking about finally, maybe come up, then go down even more. You know what I mean? Okay, the first order of the day turns out to be a good order. Good order. Caught this move right here with no drawdown. Oh yeah, actually a little bit of drawdown. Like it started going up against me a little bit, but there was enough pressure for price to run the very next high here. Okay, I wasn't aiming for, as you can see, I wasn't even aiming above this candle. It was very few 5 points. I didn't move my stop loss. I didn't move my profit because I just want to test the area here with very little risk, but very little profit as well. 100 bucks. I mean, 100 bucks for the Nasdaq. It's only 5 points. So that was a good move, but look, you see, that would have taken me out, or maybe around there, right? Yeah, you see that? That's why I didn't take more. I didn't go for a run this high or even about here because I didn't want to risk all the way down here, like 7-10 points. I didn't want to risk that. I just saw on the lower time frame that there was a little bit of a range created in this one candle here, because on the lower time frames you can see a lot of candles for this candle. And so then you see how it's kind of like wanting to go up on that little time frame. You notice that this is a bullish candle coming from below, and we just had a bit of a high put in right after that candle here. We did run that. It did run the low as well. I wouldn't consider this an engulfing candle, because maybe if this was bigger, like around here, even if it didn't break, but at least bigger, like engulfing, yeah, I guess you would have to have more body engulfing even the wicks to be an engulfing candle. But it was a bear. Even this one was not as bearish as it looks, because it only ran the low a little bit, but it ran the high coming from a, coming from a point of an upward swing. Look, you see how it now is past my entry, but before it went to my thing, it went here. Now, could I put my stop loss here? Yes, but now I'm risking 10 points or instead of 5. That's why I took a small order, because I didn't want to risk 10 points on my first day of the 13th day, because I've been making progress by being a little more methodical on the type of trades I take. And once I see it, I'm gonna press the button. You know what? You know what? I'm not afraid to lose anymore. But that fear will come back. We got 2 topics. The 13th day, we got an unlucky number going. But I'm not superstitious, and numbers do mean something. I mean, they have meaning for us if we want to take the meaning. I bet your birthday, that's a number you're never going to forget. And for you, it might even be lucky numbers. So it's highly subjective what numbers are more on your cup of tea. Oh, nice. I'm glad I didn't get in on that. You see? Now we have confirmation that taking 5 points was the right move. You don't go for more, because then you want more. And this is about the area that I would put my stop loss, though, like my take profit, because I played safe, So even I wouldn't have tried to get like here, all the way here. I wouldn't have done that, because we got this high that didn't break that one. So it could be a flip to the downside here. But the thing is, we are in the bottom of the range. So still want to be longing instead of shorting. You see? See this range here? It's on the 5 minute. Oh, the 3 minute. Let's see if it, yeah, I drew it in there too. Good. Something like that. Got the 3 minute and the 5 minute going, cooking. Oh, I like this. That's good. That's good that I did that. OCD kicking in. Here we go. We're approaching the bottom of our range. This does not yet look like a flip, unless we ran this low, this high, sorry. Then we can consider a flip. but not without its big resistance points here to bring it down. Let's see. Let's see how this area holds this one time. Okay, we ran it. Ooh, you see how people get cooked? Everybody thinks bullish, takes all the orders. Let's see what happens. All right, we're cooking, we're cooking. So yeah, I think my favorite number, my favorite number is 8. I like 8. And circle is like the yin and yang. It's symmetrical. Oh, that was it. You see that? But this could be a fakey. This could be a fakey one. And it's not at the bottom of our zone. So we're going to consider it bearish still, because it's very near that bottom. It's like playing it safe. You see what I mean? Like, yes, you can take an order there because you see a little bit of pull and you're like, okay, I'm gonna catch it. But we still got this area. That's happened to us. Actually, these past few days we saw this play out kind of similar, where we were approaching the low, pull back, looks like a big, you know, upswing to our range all the way over here. And what it ends up being is just more mitigation of this area, taking some, maybe even trade lower, sometimes even break, sometimes a little lower, and then we get the upside. So I would consider still this a bullish area, but I'm not ready to get in until I see maybe that run of this high, come back around, get a little bit of support here, and then trade up. Unless we trade into this area. Now this area, I could take a little bit of risk to try it out, this area. Now, not of course not if there's only a little bit of pullback, but the good thing is that we have made this 2 candles here. I like the fact that we made these 2 candles. That way, if it does go lower, we have another reference of where the low and the high is for that drop. See what I mean? Because when it drops with just 1 candle, then you have an imbalance, and then, or what do they call it? Fair value gap. And you don't know if you should do something with that when price trades back up. You don't know if to consider the fractal imbalance itself, the fair value gap, whatever you want to call it. You see that? See that rejection? Price might come here and then trade higher. But if it comes down here, then it's a better position for us to be in. For price to be in, not us. We are waiting for price to do his thing. See on the daily, think it's interesting to see the daily. I did say that I really like this low to be the one that's the more protected one, even though I said this could be a protected low. Oh, no, it was actually this one. Sorry, guys, this one. I like this one as a protected low and not this one. I mean, sorry, this one as well. Like this two could either one to be. I like this one more, but this one could also be, but I never did like this one. That's why I drew both the ranges here yesterday. You can watch the video if you want. I was talking about this, where we were looking, because we were here yesterday, we were in this range, right? This is today's bar, this is yesterday's bar, and I didn't like this area to protect us from the lower, especially, you know, we've been going down. Houston, we got a problem. And so I like this area to really get, but this low, forget about it. This might give us some good stuff right here. I'm glad I saw this, because look, now that it's dropping more, I don't like this low as much now, because you can tell on the daily. Okay, yeah, that is the area on the daily. No, wait. Okay, so we're on the daily, right? And this area here is, let's say here, this is January 5th. So if we go to January 5th, let's say on the 30-minute chart, we go to January 5, you see how it gets messed up. But here we are, right here. This is the low that is represented on the daily. And that's our bull area. Oh, maybe this one. Oh yeah, these are the two. These are both. You see, because this one, 1204. Let's see, 1204. Oh, look. Jeez. Wow. There we go. We broke right away. I like that. I like that better, because then I don't get cooked. I like to have confirmations to not take an order. I like to see opportunities miss out that I think are going to play out, that don't play out. Still could go up, but now we ran it. I'm not gonna jump in too hastily, even if it does go up. But I like my setups not to realize, because that means another setup is gonna play out soon. There is no lack of opportunities, but there is a lack. Well, there is a certain number of opportunities that we can take, and that we're here for. You have to be in the market. You have to be here to take the order. I wasn't here in the morning, so I didn't take any orders. It's impossible to get in if you're not there. That's what I'm trying to say. So now it's gonna probably go up more, but we're gonna wait. So on the, okay, so we drew this on the 30 minutes. So now let's do this actually. Let's remove all this, and let's do this. Let's sync this guy to the daily. There we go. And so now we put a line. Well, actually, they're already lined up, so we just go to the 30. Oh no, because I have to do it again. So what I'll do is I'll remove this and make it again. Oh, where was it? Oh, shoot. No, it wasn't there. Where was this one? And this one here. Yeah. Okay, and then let's redo this one, which was here to here. Oh, yeah. Yeah, I like that the price is trading lower because we can get that really juicy area here. Let's see on the daily, no, on the, what was the other one? The 30-minute. There we go. You see? This one, we have to watch out for this one. And actually, let's make this a 15-minute chart. Oh man. The things disappear, you see? Those are the glitches of this platform here. I don't like that. I guess you don't get to, there we go. All right, we'll just leave it on the 30-minute. All right. And on the daily, I'm gonna put this over here. And the daily here. And the reason why I want to use longer time frames today is because we are ranging very hard. I mean, we are trending, but the range is so big, right, that we need to see the longer time frames and not get caught up on the smaller ones. And shorting, I mean, that should have been the move, really, to short this area here. Of course, we didn't tap into the 50%, but it's an area of interest to short from. We were already reminded of that with this all happened today. So, you know, shorting from, for example, here, or even after that first tap and then this second tap, imagine all these profits with no drawdown. Maybe get out here on this big setup, bigger range. So get out here, plenty of room, and then even here get another entry. So if you're on the shorter, you know, if you're thinking shorting, which, you know, I don't mind shorting, but just you know, have a range, and especially on the lower time frames, that range. Oh, it synced all of them. Oh man, I think it synced all of them. Jeez. Oh, because they're the same color. I gotta change the colors of these things. All right, anyways. Well, we got this range here. To go back to, run the high, the low. All right, we'll see what happens. Ooh. Oh yeah, look at that. People getting cooked like I used to get cooked last week. Even last week, I was still getting cooked by trying to go up on these moves. And then the one, then it'll play out. There'll be one move that's gonna go up, and it might be very hard to get in, but that's fine. If we don't get in, don't get in. But don't get in nilly-willy. That's the goal. I mean, we got all this room to cover up until this area to see whether we're really coming down. How hard are we crashing, right? I mean, this is a crash because look how long it took to get here on the daily. And then in like a few days, just whack, you know? So it's a crash for us as far as a day trader is concerned. I wouldn't call this a crash as far as long-term holders and stuff like that, like people who buy to hold as an investment. Then I don't see this as being to a crash. It's just a correction. But for us traders, this is a crash because it's just we're on the daily trying to find moves. So and if we consider that, like right there, for example, right there, I was thinking of shorting the market. I'm not gonna long, but I was like, okay, if I'm not gonna long, then that means why can I short? Well, because we are in a very cheap price area. We're in a discounted area. So you never know when that pullback is going to be, especially because we don't have much to go from all the way back there because price is crashing, quote unquote. Then we have nothing to the left for a while. And what I'm going to do as homework this weekend, I'm going to look for times when this happened, this kind of action here on the daily. So I'm going to go back on the daily on another platform because this one sucks. On TradingView. By the way, guys, none of this is disclaimer advice. None of this is financial advice. Disclaimer. I'll just finish my thought because I don't want to leave you guys without finishing what I was saying. I forgot what I was saying. All right, here we go. Disclaimer, the content presented in this video is for entertainment and educational purposes only. The views and opinions expressed are solely those of the creator and should not be construed as financial advice. The creator does not sell any products or services nor is affiliated with any of the trading platforms or tools mentioned. Trading involves risk and is not suitable for all investors. It is important to conduct your own research or consult with a professional before making any investment decisions. The creator assumes no responsibility for any losses or damages arising from the use of this content. I don't know what I was saying, so. The second topic. Oh, I didn't write it down. Comparison. Oh yeah, because it's a thought experiment. Does comparing something to something, right, has to be two things. If you're going to compare, you need two things, right? And the question is, when you compare two things, are you doing so? Okay, I know it's gonna get weird now. Okay, is comparing two things automatically or inherently competition? Ooh. Ooh. It was going my way so well. Okay, I got out. I know, I got out a little soon, but that was gonna yield me $200 in profit. But I got greedy by about a point, honestly. You see? Yeah, I'm glad I got out. Okay, let me show you. So it was a long. It was a long, and look, I got in here. I got all this profit. Was about 200 bucks. It barely touched it. My stop loss was, my profit was here, and it came down, and I got out here. My stop loss was here originally, somewhere around here. So it didn't play out my way because I took too much. I wanted too much on the type of scalp I'm doing. Okay, so now we got a little something different here. Now we got a better place to long from. Oh boy, oh no. Yeah, what are you trying to do? Okay. Holy moly, that was a big loss. 245. Ooh, 345. No, 245. Oh, got scared. Man, 13th day. Jeez. And I still think it's gonna go up. That's the problem. Oh no. Oh no. You see that? Oh man, just should have waited a little longer. Oh man. It did run the high here. Jeez. Price is cruel. But that's also part of scalping. You're gonna lose no matter what, eventually. I lost the chart. Okay. Okay. Still want to long it. I still think we're going higher. Wow, oh my God. All right. Glad nobody's watching. Oh my God. That was mean. That was mean, Price. That was really, really, really mean. Wow. Don't force it. I'm trying to force it. And then look. Oh my God. This one, yes. This one, yes. But this one? Yeah, I should short. Look at all that strength. Oh, now it comes up. Yeah, now it comes up. Of course. Yeah, thank you. Mm. Nice. Ah. Yeah, I thought it was a good idea to short now, of course. Um, what am I doing here? Well, I kind of like this little range. I don't know if I'm being impatient by taking so many orders in a row, but I'm trading what I see. I think we're going down now. All right, back to the topic. It's comparing two things. Inherently a competitive thought. Okay, so let's rewind. Let's rewind. Oh wow, look at that. And think about some philosophers out there, not to mention them. I'll mention some. I mean, Emerson, Hegel, Spinoza. They are philosophers that were thinking about what is, right? What is the world around us? What is our minds? Who are we? And they came up with some really good ideas. And one of the ideas that they all kind of, in their own way, would probably agree to this statement, that a competitive mind cannot be a creative mind. So you cannot be creative and competitive at the same time. And both can achieve goals. It's not like one is better than the other. You can have either one of those mindsets, but well, one is better than the other one. Creating is better than the other one. And the reason being is that it opens the doors for others. That's why highly competitive people, by definition, don't want others to do well, because that means they're doing better than them. Whereas when you're creative, it doesn't matter. It's not comparing two things. It's just creating, and watch the creation of others and indulge in creation, basically. So in these philosophers say you cannot be creative and competitive at the same time. You have to be, now you can be both, but at different times, not simultaneously. So when you think of scarcity, for example, you are not thinking in the creative way, you're thinking in the competitive way. And when you think of abundance, you think in the creative way. By definition, okay? I don't have a bias too much in this. I'm just explaining what these philosophers are talking about. A competitive mindset has to compare two things, at least two things. It cannot be competitive by itself, because otherwise we would probably argue that it's being creative. So I think one of the downfalls we have as traders, you and me, is that, or just people who like to watch trading videos for some reason, people like us, who compare our results with external things. And it's hard to actually be creative in this space, because competition is like a huge thing here, right? There's got to be a buyer, there's got to be a seller. You got to have both in these markets, in any market. So because we're comparing, for example, every time I lost my trades, somebody got paid. Somebody made the money that I lost. There's no other way. I mean, collectively, not just one person, but collectively, the whole system gained from me trading. And that's the way I like to look at it creatively. It's like, I'm actually, by trading the NASDAQ or whatever instrument, by trading, by putting my money in the line, I'm actually feeding into the creative. I'm creating the, the markets, pretty much. That's what markets are created by traders, by buyers and sellers. So that's the way I like to look at it, to not be comparing myself with others, or thinking that, for example, the big comparison could be made between retail traders and institutional traders, and think that one is better than the other. And I would argue that there's two different types of traders. The retail trader is trying to build a business with their own capital and not trade, not have like clients and that kind of thing. Whereas institutional players have clients and institutions, whether it's a bank or whatever, a hedge fund, they have the responsibility to clients, to other people. So they're not building their own business, they're working for the institutions. So, I was watching this documentary about these traders, institutional traders. They don't even make trades. Their job is not, like, they're traders, right? And they're hired by a hedge fund as a trader, but they're not trading. What they're doing is they're working on the computers and algorithms that make the trade automatically. You know what I mean? I don't know if that's the case for every hedge fund or how. I think it's like sagging. I don't know how prevalent that is, um, non-trading traders are, institutional non-trading traders. So what does that tell you, right? If they're not even trading, the institutional ones, what does that tell you about the retail trader? Well, you got to find some kind of edge because it's very likely that you're going to lose money in this. And everybody knows that. And I actually confirmed it by that leap competition results that I told you about, where 90,000 people entered and only 3,000 people were profitable 5% or more. That's not even saying that they were profitable 10% or more. Just 5. Just 5% or more in profits. 3,000 people, less, by the way, less than 3,000 people, like 2,800 some, took more than 5% profit. Shit, I got in a little early, but I'm gonna go for a good one here. Should let it play out, but that's the thing with losing is you get scared, you get anxious, you get, oh, I just want to hold on to it, but it is dropping. But come on, not again, no. Oh boy, oh boy. You gotta take all the loss, right? All of it, 100% of it. Ah. That was such a good trade to not make the profit. I had the profit. I had plenty of profit on that one. Wait, well, that's not plenty, but yeah, it looks a lot smaller than it really is, but that's okay. 145, 153. Yeah, that's 8 points. That's plenty, more than plenty. Jeez. Friday the 13th. Dang, that's mean. That was mean. I wanted to get in on a short there, but not. I was late. I'm gonna keep here, but I don't think you guys need to see my ugly mug for now. I'm a little pissed off too, so you guys can see the screen. Oh boy. Yeah, should have stayed out. Well, I should have quit at $100. I had a dream that I evened out. Like last night, I had a dream that I was trading this account, this specific account, with the in my dream I had the same exact balance that I had when I started today, almost to the T. I mean, I didn't double check if it was, but like I can remember the balance in my dream, and I dreamt that I evened out. Like I took like 10 orders. One was really well executed and gave me profit. No boy, what am I doing? I'm in the wrong side. I'm on the wrong side. Oh boy. I'm on the wrong side. This is called blowing up the account in one day. $700 in loss. I'm out, guys. I shouldn't have even been here to begin with. I'm glad I covered the topics. Thanks for watching. We'll be back later. Peace out.